Hey everyone, this is Luis again with Antonine Capital, your business loan brokerage. And we're continuing on with our 52-week project on just diving into just financing for your business, focusing in on SBA loans. So far, we've talked about what the SBA loan is, who the SBA is, and what a guarantee is. Now, in this follow-on video, we're going to dive into which type of loan is right from you, be that an SBA loan, a traditional bank loan, or alternative financing. So that's three tiers we're going to talk on. I'm in the alternative financing world, so we'll dive a little deeper onto that. But before we start jumping into that, we need to understand that SBA loans come from either a traditional bank or alternative financing. In order to be an SBA lender, you just simply need to be qualified or certified by the SBA. So there are multiple types of lenders that can write SBA loans. So we'll keep that in mind as we go through this conversation, is that even though we're treating the SBA or the SBA loan as its own independent thing, it's not. If we remember, SBA loans come from lenders who are certified to do those loans. So in this conversation, just know that even though I'm breaking it out as its own thing, it's really a subset of the other two. The other two can provide SBA loans. That's traditional banks and alternative financing. So we'll start off with traditional banks, because that's what everybody seems to more be familiar with. And if you know your way around traditional banks, and as a small business owner, you know they are very difficult to get a loan from. They have interest rates can be a little on the higher side. You have to have extensive experience. I joke that really the only way to get a traditional bank loan for a small business is if you don't actually need the money, right? Because it's so challenging, or you need to be so robust as far as your background in order to be able to secure a traditional bank loan, that they're really prohibitive for most small businesses. So that's really where the SBA loan kind of comes in to try and alleviate some of that. Now, truthfully, it does introduce some other challenges into this all, but it's there to provide a means for businesses who still need a good solid footing to be able to get financing. You typically cannot be a startup or a brand new business to get an SBA loan. That is with a huge asterisk, because there are ways to buy businesses and fund a startup with an SBA loan. But in comparison to your traditional bank loan, it's very much night and day as to what you can and can't do, or who can and can't qualify, I should say. Now, compare that now to alternative financing. Like I said, that's the world that I more live in. I do have relationships with traditional banks to broker loans. However, the bulk of my relationships come from alternative financing. And what is that? So that is these lenders can also write SBA loans, but they can also write a different type of loan that your business may need. What the beauty there is that if you don't qualify for a traditional bank loan or a SBA loan, there are other options for you to kind of still get money for your business. Now, just because it says alternative financing, typically the folks that we are servicing are people who can't get funded by the traditional banks. That does communicate that, yes, you'll probably be paying a higher interest rate. It is not gouging, though. It is not exploitive. It's typically, our lenders are looking at business owners as people that are going out there and taking on a different level of risk than what the traditional bank will be more accustomed to servicing. So for us, if you've been around in business for at least 4 months and have at least 5,000 gross sales happening, it opens the door to be able to secure financing for your business. Now, how many products you're eligible for at that income rate is going to be obviously be a lot limited, and it won't open up an SBA loan for you. But if anything, it opens up the door to at least start building business credit, so that when the time comes that you can apply for an SBA loan, you have a track record, and that's what's helpful with that. So take that into account. Now, for which one would be best? Again, a lot of it's going to depend as to where you are in your business life cycle. And if you're relatively new to the business, you'll probably be looking more at that alternative financing to secure some level of financing to keep your business growing and kind of build that momentum. If you're a more seasoned entrepreneur, you have a more seasoned business, not a seasoned entrepreneur, you have a more seasoned business, then that'll open up the door for both the SBA loans and the traditional bank loan. So that's a good rule of thumb to kind of just gauge to where you are. So kind of wrap everything up there. So we kind of went through the difference between an SBA loan, where they come from, traditional banks, and alternative financing. For tomorrow, we're going to dive a little deeper into eligibility criteria for the SBA loans, go into a little more detail on that. If you find these valuable, keep coming back. Head on over to our website, AntonineCapital.com, AntonineCapital.com. You'll find that somewhere around wherever you're watching this video, reading this blog, or wherever you're consuming this content. And thanks so much for sticking with me here till the end. And I look forward to working with you, hearing from you, and helping you in any which way I can. So this is Luis signing off. Thanks.